What's up, everyone? My name is Ale. Welcome back to my world of stocks. So, Warren Buffett just released all the stocks that his company purchased during the second quarter of this year, which, by the way, at that time, the S&P 500 had already crashed by well over 20%. And like typical Buffett fashion, while people were selling out of the market, Buffett went in and he purchased a total of 9 different stocks. So in today's video, I'm going to do a really fast rundown of every single one of these stocks, along with my own really quick opinion on each one as well. And like always, I'm also going to, of course, let you know if I plan to buy any of these stocks myself anytime soon. Should be a really fun video. I hope you guys enjoy it, but we got a lot of stocks to run through, so let's just dive straight into this list. Okay, so the way I have it set up here is I put the stock name on the far left, then next to that I put the percent increase from the purchase, next to that I put how many shares he purchased, and finally on the far right I put the total value of the stock, basically his entire stake in that company. And I rounded all of these numbers just to make it easier too, but starting here from the smallest percent change to the largest, we've got none other than Apple at stock number 9, which was an increase of just about 0.5%, which may seem small at first, but because he already owns so much of it, it was actually a giant purchase of around 4 million shares, bringing his total stake in the company to now more than $150 billion. Now, this one is no surprise here because Apple has long been Buffett's largest holding in the portfolio, and he continues to buy it whenever he sees it dip even slightly, and that's because he just loves how large and dominant and reliable Apple can be, especially with how sticky their business is that gets customers hooked on it with phones and tablets and computers and watches and headphones and several other things, gets them onto the ecosystem, and then they sell them all kinds of services that run on top of that. And the result is that last year alone, they did over $360 billion in sales, with close to $100 billion of that going straight to the bottom line. That's pretty crazy. Not to mention that they also have a gigantic balance sheet with over $200 billion of cash and investments alone that can be used to enter new markets in the future, like, for example, all the electric vehicle rumors that continue to circulate around Apple. Sales can sometimes be cyclical though because of their still heavy dependence on iPhone, which is why their revenue is only growing by around a mid-single digit percentage right now, but I still love this company long term and I'm actually invested in them myself too. At today's prices though, I'm kind of just holding the stock because it's already largely recovered from the lows of this year. In fact, in the first quarter, Buffett specifically said that he wanted to buy more of Apple stock if it would have fallen more. And that's exactly what happened in the second quarter, so he went in and purchased more. But here, now that it's already recovered at these higher levels, I kind of doubt that Buffett will be buying much more at this time. Anyway, that's going to move us along here to stock number 8, and that's going to be the giant oil and gas company Chevron, which Buffett increased his position on by a little over 1% after more than quadrupling it in the prior quarter before that. So this was more so just kind of a tiny continuation of that huge buying that he already did in the first quarter. Overall, though, it now leaves his total stake in the company at over $25 billion, which is one of his largest holdings. Now, if there's anything that we know about Buffett when it comes to energy stocks, it's that he's super active with buys and sells as he navigates his way through all the volatility. But overall, his recent bets on oil and gas have paid off as gas prices have soared to record highs this year amid devastating inflation, as well as the global conflict between Russia and Ukraine, where much of the oil is produced. As a result, Chevron stock has skyrocketed by over 30% because of the surging demand just this year alone. The energy sector is just too volatile for me though, with sales and profits of most oil companies jumping around all the time depending on what the macro market is doing specifically. Plus, I personally feel that the future of energy will be renewable, so if I was to invest in it, I would rather invest in one of those kind of pure play renewable stocks if anything. But I gotta admit, Chevron's 3% plus dividend looks pretty attractive, and I'm sure Buffett is enjoying that himself. On to stock number 7 though, we've got one that I actually own myself in Activision Blizzard, which is the giant gaming company behind famous titles like Call of Duty, Warcraft, Candy Crush, and more. And this latest quarter, Buffett purchased another 4 million shares of it, increasing his position by another 6%, bringing the total stake up to $5 billion. Personally, I love this move because Buffett is betting that the acquisition from Microsoft will get approved, which is the same reason why I bought Activision myself. And so far, the deal seems to be progressing along nicely, with Saudi Arabia recently approving it, the UK setting a deadline to approve it by September, and the US likely being around the corner too. By the way, the reason why other countries are involved is because, well, first of all, both companies have giant international presences, but also investment and other things. So, thus, it does require special approval from additional regulators depending on the area and on the circumstance. Of course, it's all speculation though on whether the deal will actually go through or not, but I felt that the gamble was worth it since I was able to buy my shares at $76, which is significantly lower than the $95 per share that Microsoft is going to be paying for it. If the deal does in fact go through, my profits could be as high as like 25% in a very short amount of time. And I'm just happy that Buffett also thinks that it'll get approved because I'm really hoping it does. Okay, moving on to stock number 6. That's going to be McKesson Corporation, ticker symbol MCK, at a 9% increase to his position. And here, this is a fairly large increase that I feel does make sense since McKesson was actually a brand new stock to his portfolio that he purchased in the previous quarter for the first time ever. Now, if you've never heard of them, they're a healthcare related company, but what's interesting is that rather than being like a pharmaceutical or biotech company, they're actually a healthcare solutions company that works largely in supply chain management and product distribution. For example, a large chunk of their business involves in the distribution of pharmaceutical drugs to tens of thousands of retail stores, as well as supplying medical devices and various supplies to hospitals and doctors' offices around the country. I personally love the business because I think it's something that will always be needed, but unfortunately, investors already flooded into the stock as it is currently trading near an all-time high, while the rest of the market has essentially been crashing throughout the year. Another concern I have though is that while their sales are mind-blowingly large in the hundreds of billions of dollars every year, pretty crazy, but their expenses are also astronomically high by similar amounts, leaving them with barely much like profits. Really, when you look at it, much smaller profits than you would typically expect when you look at how high the sales are, which is why they have such a cheap price to sales ratio but a fairly high price to earnings ratio. Overall, the stock price is too high and their profit margins are too low, which makes me feel like they only really survive because of their massive scale, which I feel can only grow so large at their already gigantic size. So it's going to be a pass for me, unfortunately. Okay, moving on to stock number 5 though, that's going to be the first double digit increase at 11% in Markel, ticker symbol MKL, which, like McKesson, this too was another brand new position for Buffett in the previous quarter, so this was just kind of a steady continuation of that buying. Not a lot to talk about here though, as I see this as a fairly boring insurance and investment related company with a volatile but very slow moving stock that is only up about 15% in the past 5 years, and more recently the stock has fallen by over 20% from its highs, so I'm guessing Buffett is just kind of buying this one as a value play since it's currently sitting near a 52-week low with a forward PE ratio that is over 55% cheaper than its own 5-year average. But when you compare that ratio to the sector, well, that PE is actually more than 70% higher, and their financials can be all over the place sometimes, with a 10% drop expected this year, followed by a 17% recovery expected the year after. So for me, it's just a little too volatile, it's too slow moving, it's too boring, and too highly valued of a company that doesn't even pay a dividend for all that other stuff you have to take. So I know Buffett loves these type of companies. I wish him luck with it, but it's going to be a pass for me. I just think there's more exciting businesses out there in the market. Speaking of more exciting businesses though, one that investors have been talking a lot about lately is stock number 4, that is Paramount, ticker symbol PARA, which was an increase of 14% to his position. And by the way, just like the last two stocks, Paramount was also a brand new purchase in the first quarter. So this was another continuation of that buying. Now, the reason why Paramount gets so much attention is because this is a giant media corporation that owns major properties and networks like Paramount Pictures, CBS, The CW, Comedy Central, MTV, Nickelodeon, BET, CMT, and even Showtime. Which, by the way, this also includes their new streaming service called Paramount Plus that operates in the red hot video streaming market and is home to popular shows like Halo, Star Trek, SpongeBob, and more. which has already topped more than 40 million subscribers with both a $5 ad supported version and a $10 ad free version, making it, a compelling option, different options there for consumers. And when you combine it with Showtime, that subscriber count has actually grown even larger to over 60 million. Now, when looking at the stock though, there's no doubt that I feel it's actually getting pretty attractive because it's already crashed by over 60% from its highs, and that's left the valuation significantly cheaper than the sector, while the dividend has grown pretty large at around 3.7%. There's also solid profitability with them, even though the revenue growth has been struggling in recent years, which is kind of the downfall, or the downside, I should say, with this company and the stock. But that's essentially what this is for Buffett. This is a value dividend play with turnaround potential in a hot market. For me, though, I would actually be really interested in it if I didn't already own Amazon and Disney that give me so much exposure to the video streaming market as it is. And I also actually like those more because I think they're better diversified, they have stronger brands, they have more growth. So for me, it's going to be a pass, even though Paramount is very high up on my watch list. And it's getting more interesting the more that it falls, to be honest. All right, guys, we are now down to the final three stocks, and coming in at number 3, that's going to be yet another stock that was a brand new position for him in the previous quarter, and that is Celanese, ticker symbol CE, at a 16% increase to his position. Now, this is a chemicals company that primarily sells acids and polymers that are typically used as intermediate chemicals for various coatings, paints, adhesives, papers, packagings, automotive products, and even electronics. Now, you would think that this is a pretty slow moving, maybe kind of boring business, but in reality, their sales can actually be quite volatile because of their heavy reliance on the macroeconomy. In fact, 2019 and 2020 were both severe crashes for them before 2021 finally boosted their sales thanks to the economy opening back up following the pepperoni lockdowns, where demand for their chemicals skyrocketed and was even further boosted by supply chain and inflation issues that further raised their prices from the already high demand. As a result, their stock skyrocketed as well, but has now returned to its usual crashing ways and is down more than 30% year to date, while also sitting at the very bottom of its 52-week range. Unfortunately, the volatility is expected to continue as analysts expect sales to climb by a double-digit percentage this year to a new record high before turning negative once again the year after. With that said though, this company is consistently profitable with a valuation that is dirt cheap at around 50% lower than the sector, and also carries a nice little dividend of more than 2% that has some excellent growth metrics on it. So overall, I actually really like this move by Buffett as a turnaround kind of value dividend play with solid profitability, and I would actually buy it myself too if I was more interested in their business and the markets that they operate in, but I think I'm going to wait a little longer just to see what happens. Maybe it happens to fall a little bit more before I pull the trigger, because I'm still kind of 50-50 on it. Just a business that I'm not super excited about. Alright guys, that brings us now to stock number 2, which is Occidental Petroleum, ticker symbol OXY, who is of course a very large oil and gas company that has a volatile history with Buffett, as he sold in and out of it quite a few times, while also backing them on several occasions and gaining special stock privileges along the way. But his most recent purchase increased his position by 16%, bringing his total stake in the company up to a whopping $13 billion. My thoughts on this one are similar to that of Chevron though. I wish I felt more comfortable investing in oil and gas, and I wish I was a buyer before all the chaos happened that sent oil prices through the roof, but as it stands, Oxy is currently trading close to an all-time high, and the tiny dividend of less than 1% is not enough to persuade me into chasing this stock. Alright guys, finally here, that's going to leave us now with the last stock of the day, and coming in at number 1, that's going to be Ally Financial at the largest increase of over 200%, which makes total sense because this was another brand new purchase for him in the prior quarter, and it was also the smallest purchase of that group. So naturally, he would want to increase it a lot now if he was still, interested in the company, if he still liked it. What's also interesting about Ally though is that Buffett has actually been selling out of most bank stocks recently, but Ally is one of the few that he actually went out and purchased. Perhaps he likes it for their large online presence, as they primarily operate as an online bank with traditional services like savings and checkings accounts, while their Ally Invest segment provides investment advisory services too, which of course are markets that Buffett loves and is very well versed in. But like most other financial stocks, Ally has been crashing hard recently due to the weak macroeconomy, leaving it more than 50% cheaper than the sector while paying a pretty nice dividend of over 3%. But you guys know me though, the only bank stock that I've ever trusted or felt comfortable enough to invest in long term is the largest among them, and in my opinion, the most well run one too, and that is JP Morgan Chase, ticker symbol JPM, and I think I'll be sticking with that for now. Anyway, that's going to do it for today's video. What do you guys think about all these stocks? Personally, I've never been a huge fan of the types of stocks that Buffett invests in, usually value stocks, kind of boring businesses, not really my style. I like to mix it up a little bit and include some higher growth, more exciting businesses, especially tech related companies and stocks. But out of the list from today, I would say Apple is definitely my favorite. I'm actually invested in them myself. And then Paramount and Celanese I do find very interesting and pretty attractive as well. So I'll have to keep you guys posted on those two in the future. But other than that, not a whole lot here that I particularly like too much. But anyway, those are just my thoughts. I'd love to hear what you guys have to say down below. Do you own any of these? Do you like any of these? I'd love to hear your thoughts. Drop those comments. Thank you so much for watching and for all the support. It really means a lot to me. Now we'll catch you guys in the next video. Take care. Bye-bye.